Is the pandemic priced in? That's the question at the heart of this market. Last month, the averages crashed. Trillions of dollars in value were wiped out in the blink of an eye. And that's why for weeks now, all sorts of stocks have been able to rally, including stocks that are right in the blast radius of the COVID-induced slowdown. Take automatic data processing, ADP for short. It's the largest payroll processor in America. At a time when millions of people are losing their jobs, do you think ADP would be a tough stock to own? But this morning, the company actually reported a slightly better than expected quarter. While management had to cut their full-year forecast, they didn't withdraw their guidance like so many other companies. They gave you some certainty about how bad this would get. In response, the stock rallied nearly $3, in large part because ADP was already punished for this weakness. From mid-February to mid-March, the stock plunged from 182 to 103, 43% decline. That was too much. Since then, ADP's rebounded to 145. I think that's more realistic. Hey, more important, these guys are uniquely plugged into the U.S. economy in a way that could be incredibly useful to the U.S. government. Listen to what former White House economic advisor Gary Cohn had to say on closing bell yesterday.
If we really want to get this right, why don't we just give the money to the payroll processors? Let the payroll processors, they know how many companies need the money. They know how many employees they have. Just Treasury, go send the money to the payroll processors, and then let's follow up with the paperwork behind that. I think that would have been a cleaner way to do this, and I think we would have had less mistakes in getting the money to the right people.
I think that's a great point. Let's dig deeper with Carlos Rodriguez. He's the president and CEO of Automatic Data Processing to find out more about the quarter, the state of the labor market, and the craziness about the stock market, too. Mr. Rodriguez, welcome back to Mad Money.
Hi, Jim. How are you?
Good, Carlos. I hope you're doing the same.
I'm doing all right. I hope you're healthy and your family's healthy. It's obviously a very challenging time, and I wish we weren't talking under these circumstances, but happy to be here with you.
I'm glad you're here. All right. I got to ask you something. We always hear, wait a second, how can the stock market be going up when there's maybe 20 million people unemployed? Things are going badly. You know, you are at the intersection of really business creation in this country. What do you tell people when the stock market goes up, knowing what you see in the job world?
I tell them to call Jim Cramer. Because I think, Jim, what happens is as you tell all your viewers, the market is the ultimate kind of look into the future. And I think what might be happening is people may be already anticipating the worst may have been behind us. I don't know, because obviously I'm not a scientist and I'm not a doctor, but we have seen a couple of indicators of some bottoming. As an example, we have some HR systems that track the number of new job postings and the number of screenings, like background checks when people get hired. And those numbers just kind of fell off the cliff at the end of March, all the way into April. And in the last couple of weeks, we've begun to see those numbers actually stabilize. And so that's obviously, that doesn't mean people are getting hired yet, but it's possible that companies already are anticipating some kind of normalization or some kind of opening in certain states, and they already may be actually posting jobs. So the market has a way of sensing these things, but I think you know that better than I do.
Well, thank you. But there's some great comments at the end of your conference call, your third recession. I think maybe you can put it in perspective more than most who are particularly worried about their job or have lost their job. You've seen it. There is an end, and it does come back.
Absolutely. I tried to really give a sense of realism, but also optimism on our call today, because the truth is that this downturn is much worse than what we saw in the last two recessions in terms of just magnitude and also the speed. But that doesn't mean that it necessarily has to last as long. When you see all the government stimulus that's being put in to the system, and the fact that it's a health crisis and not a banking crisis or some other kind of crisis like we had in 2000 or in 2008, there's some hope that things could improve quite a bit faster. But what I tried to convey is that there's really no way of escaping the fact that the numbers are bad. Right. You know they're bad. The people out there know that they're bad, and the people that are losing their jobs are feeling it, unfortunately, firsthand. So there's really no way to sugarcoat it. It's a bad situation, but I think the government has reacted in the right way. And I'm hopeful that as we get through the health crisis, that the economy, which obviously exited in a very strong position, as we did, we had a great third quarter. I think, as you said,
6% organic growth. It's one of the best quarters you've ever had.
Yeah, we really saw the metrics. I mean, we've been working really hard over the last 2 or 3 years. You know this. We've talked a few times about improving our products, improving our productivity. We've had margin improvement. We've had improvements in our client retention. we really were firing on all cylinders. And this happened. It's happened to everyone. So there's no sense in crying over spilled milk. We got to move forward and pick up the pieces of what we have. But we exited in a very strong way, just like the economy was in strong shape. And so I think that we in the economy, I think, are in a strong position when this thing rebounds to really be able to take advantage.
Well, I ran a clip from my friend Gary Cohn, who had, I thought, a very sane way. I went to the Treasury, said the same thing. ADP would be the best way to figure this out. Neutral, you get the numbers. No persuasion, no mistakes, no giving to Ruth Chris, no giving to Shake Shack, no giving to the LA Lakers. Why do you think you didn't get it, and how much better do you think you could have done?
Well, as you probably know, we've been working with various parts of the government. So we've worked with Treasury, with the IRS, with SBA. I myself have spoken with a number of senators. We offered, I think, in an open letter to U.S. leaders that we would help in any way that we could. And the problem is that this is a very complicated situation. The scale of the issue that needs to be addressed is quite large. So I think when the clip that you just played, the concept of getting money out there and taking care of the paperwork later, I think is a great idea, but probably not one that was workable. And in defense of what has happened with the SBA and with the banks, had we taken that approach with banks, we probably would have been able to expedite the money getting into the hands of small businesses. But we've said
getting into the right hands, getting into the right hands, because you have the real figures.
Absolutely, we definitely do, and I think we have a great relationship with government. As you know, we're completely nonpartisan. We don't have any real biases, and we're just here to help. We want to be good citizens, as I think you've said numerous times on your show. This is the time for all of us to pitch in and be good citizens, help our associates, help our clients, and help our country, and frankly, help our world, because we are a global company.
Well, as a client of your company, I can tell you you're doing the best you can. I wish it would have been a lot easier to go to you. But you know what? They did what they did, and it's keeping the country afloat, and you're doing what you can do, too. I want to thank Carlos Rodriguez. He's the president and CEO of ADP, a great American company, 2.5% yield, unbelievable quarter. This is a buy. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.